The company, ASML, has been facing significant challenges due to US and Chinese export restrictions on China. The company's stock took a massive hit, losing $85 billion in value almost overnight. The Philadelphia Shea Semiconductor Index is higher than ASML's US traded shares, but its European trading shares are still under pressure, down 5%. CEO Christoph Fuch attributed the weak results to several factors, including delays in factory construction, weakening demand in China, customer cautiousness, and push-outs of investments. Despite the artificial intelligence boom, energy transition, and electrification providing a strong upside, the market would be very sad without AI. The company's weak performance was further amplified by the mistaken early release of its financial results, which were originally scheduled for Wednesday but were published a day earlier due to a technical error. CFO Roger Down described the 20% as a normal percentage of their business for China. The drop in expected China sales is largely due to increasing pressure from the US and its allies on China as they seek to limit the country's access to cutting-edge chip technology. In September, the Netherlands published new export control rules that require ASML to apply for export licenses in the HA instead of the US for some of its older machines. China-based customers have been stockpiling the company's less advanced deep ultraviolet lithography machines to get ahead of US export restrictions and maintain access to this critical technology in the second quarter of 2024. ASML sourced as much as 49% of its sales from China, but with the expanded export restrictions, demand from China is expected to dry up significantly. Bank of America analysts highlighted that ASML faces a sharp decline in China revenues, with a forecast of China accounting for around 20% of its revenue in 2025 implies a 48% year-over-year decline, more severe than the 3% they had anticipated. Abhishek Prash, founder of Toronto-based advisory firm, told CNBC via email that demand from China for ASML machines is likely to drop significantly as the firm is severely restricted by export controls. Like Intel, ASML is deeply reliant on China for ASML, and it is watching what is taking place with China as a potential restriction on business as the chip world is cut from China. The impact of US chip export curves on ASML's China sales is particularly significant due to the company's unique position in the semiconductor supply chain. ASML has a monopoly on the production of extreme ultraviolet lithography machines, which are essential for manufacturing the most advanced chips used in cutting-edge technologies such as smartphones, data centers, and AI accelerators. ASML's dominance in the EUV market is the result of a long history of innovation and strategic partnerships. The company was spun out of Dutch electronics giant Philips in 1984 and went public in 1995. By the early 2000s, ASML had caught up with the world's leading chip makers and began developing EUV technology, which uses extremely short wavelengths of light to etch tiny patterns onto silicon wafers. ASML's crucial role on the chip stage has brought it wild success over the past few years, making it even more valuable today than Intel, one of the biggest chip makers. ASML's double-digit growth every year and its 32,000 people make it a valuable company today. Peter Wenning, CEO since 2013, joined ASML back in 1999, just 15 years after its humble beginnings. The company started as a subsidiary of Dutch electronics giant Philips in 1984, conducting research out of a leaky shed next to a Philips office building in Eindhoven, Netherlands. In its first year, the company successfully launched a first-of-its-kind machine that used precise rays of light to print tiny designs on silicon to make microchips, a technology known as lithography. To fund the expensive development of EUV, ASML sold shares to its biggest customers, including TSMC, Intel and Samsung. This move helped the company continue investing in the technology and maintain its lead over competitors. In 2019, TSMC became the first company to use ASML EUV machines in high-volume production, giving its customers like Apple a significant edge in the market. In recent years, Intel and Samsung have been investing heavily to catch up, with ASML planning to purchase next-generation high-NA EUV machines, which promise to push the boundaries of chip manufacturing even further. However, these machines come with a hefty price tag of over $300 million each, making them unaffordable for most companies. The chip industry is facing geopolitical tensions, with the US and China waging a tug-of-war. ASML, the company's CFO, down, has decided to take a more cautious view on China due to speculation on potential export control measures. Intel's biggest customer in the US, has been struggling with declining sales and mounting losses. Samsung, another major customer, has delayed the construction of new factories in Germany and Poland. Intel's biggest customer in the US, Intel, is cutting expenses in a restructuring push, which has not helped the sentiment. Memory chip makers such as Samsung and SK Hynix are also being careful with their spending, affecting demand for ASML chip machines. The timing of this new move is critical, as the global push for semiconductor independence is underway, with various countries launching their own CHIPS Acts to boost domestic production. The US has proposed $52 billion in subsidies for chip companies to manufacture on American soil, while similar initiatives are underway in Europe, Korea, Japan, and China. Intel recently announced a $20 billion chip factory in Ohio and is building one in Arizona, just down the road from a massive new factory where TSMC will make advanced chips in the US for the first time. Samsung is building a $17 billion factory in Texas. Despite these headwinds, ASML's long-term prospects remain strong, with a $36 billion backlog indicating significant demand for its machines. The company operates on a different cycle than its customers, with machines often ordered years in advance of when they are needed. The short-term impact of US chip export curbs on ASML's China sales is significant, but the company's long-term growth prospects remain intact. The situation has broader implications for global tech politics, with the European Commission President, Ursula von der Leyen, emphasizing that the EU would approach China differently than the US. ASML faces a complex balance between maintaining technological leadership, navigating international regulations, and finding new growth markets. The pace of technology innovation is unstoppable, and the ongoing semiconductor race is a delicate balance between innovation politics and business in our interconnected world. China's Ministry of Industry and Information Technology, MIIT, recently announced a significant breakthrough in semiconductor technology, the development of two deep ultraviolet DUV lithography machines. These machines have achieved significant technological breakthroughs in their own intellectual property run but have yet to perform on the market. The MIIT called on domestic chip firms to use these machines, signaling a push towards greater self-reliance in semiconductor production. The news sparked a surge in Chinese semiconductor firm stocks, with Shanghai Yongjiang High-Tech Park Development and Shanghai Highly Group hitting their daily limit of 10% gains by market close. However, experts remain skeptical about the significance of this claimed breakthrough. Leslie Wu, chief executive of consulting firm RHCC, points out that the newly announced lithography machines are still 15 years behind the most advanced lithography machines used globally. The more advanced of the two machines mentioned by MIIT has a resolution of 65 nanometer or better, while ASML most advanced lithography machines currently achieve resolutions of 8 nanometers and less. The technical specifications of the two DUV lithography machines include a 193 nanometer wavelength machine with a resolution below 65 nanometer and an overlay accuracy below 8 nanome, and a 248 nanometer wavelength machine with 110 nanome resolution and 25 nanome overlay accuracy. These machines still lag behind ASML advanced DUV machines, which can operate at a resolution of below 38 nanometers with an overlay accuracy of 1.3 nanometer. Additionally, they fall far short of ASML cutting-edge extreme ultraviolet EUV machines, which use light with a wavelength of just 13.5 nanometers, almost 14 times sharper than DVI's 195 nanometers. US-led export restrictions have limited China's access to ASML most advanced technology. On January 1, 2024, the Dutch government stopped granting licenses for the shipment of ASML most advanced DUV immersion lithography systems to China. This is significant because China is the third largest market, accounting for 15% of ASML sales in 2021, worth around $2.5 billion in the first half of 2023. Chinese companies have been doubling down on efforts to innovate and develop their own chip production technology. Shanghai Microelectronics Equipment, SME, China's leading producer of lithography equipment, filed a patent for an EUV chip tool in March 2023, focusing on extreme ultraviolet UV radiation generators and lithography equipment. The company has ambitious plans to demonstrate a 28 nanometer capable system in 2023, though it is unclear if mass production has begun. These patents mark an important milestone in China's push to develop independent semiconductor manufacturing capabilities. The breakthrough claimed by Fudan University in producing 8-nanometer chips without EUV lithography is particularly significant, as it could potentially reduce China's dependence on foreign companies and reshape the global technological landscape. However, it also brings challenges including the need for continued investment and infrastructure development to support this new technology. The U.S. government has been aggressive in its efforts to curb China's semiconductor progress, with the Trump administration initiating this push in 2019 and the Biden administration pressuring allies like the Netherlands and Japan to impose restrictions. The U.S. has been wielding the Foreign Direct Product Rule, FDPR, as a powerful negotiation tool, allowing Washington to control sales of products made anywhere in the world provided they use even the smallest amount of American technology. The U.S. has also implemented the CHIPS Act, providing billions in subsidies for chip companies, but there is a condition that companies must agree not to sell their most advanced chips to China. This move further tightens the screws on China's access to cutting-edge semiconductor technology while Washington is investing billions of dollars in building up its own domestic chip plants. The growing high-tech rivalry between the US and China is shaking up global supply chains, and pressure appears to be growing on key players to take ASML's position in this conflict. The company is of strategic importance to both the Netherlands and the global semiconductor industry, and Dutch Prime Minister Dick Schoof has emphasized the need to balance ASML's economic interests against other risks. The impact of these export curbs on ASML is substantial. Restrictions on shipping and servicing equipment directly affect the company's operations. ASML makes about 25% of its earnings from servicing, maintenance and upgrades of its installed base of equipment. China forms a significant chunk of that earning base. China has not remained silent in the face of these restrictions, with state media outlets issuing warnings of potential retaliation, suggesting that China might impose trade restrictions or seek alternative suppliers and re-evaluate its cooperation with the Netherlands in more global areas. If ASML loses the Chinese market, it could suffer significant economic losses, potentially leading to a decrease in ASML's global market share and a shift in the balance of power in the semiconductor industry. China's semiconductor industry is pushing forward, with international cooperation preparing for 5-nanometer chip production and collaborating with Huawei to produce Kirin chips for smartphones and Ascend 920i chips. However, SMIL faces significant challenges, with production costs being 40 to 50% higher compared to industry leader TSMC and yield rates being less than a third of TSMC's. China's determination to advance its semiconductor technology despite export restrictions is evident in the global semiconductor industry, with China spending record amounts on chip equipment, with $10.6 billion spent in the last 3 months of 2023 alone. The US continues to tighten export controls, particularly on AI chips, leading to a surge in demand for Huawei's Ascend chips in China as companies seek alternatives to US products.